Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 17th of September 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, well let's kick off with a look at the overnight changes and price moves to be aware of. And as it's Monday, we'll look at things from a weekly perspective. And really the story of last week was pushback from European majors such as the pound sterling and the single currency. Pushback from the Antipodes in the form of gains for the Australian dollar and the New Zealand dollar. And even the Mexican peso and the South African rand pushing back against the dollar, 2% in the case of the Mexican peso and 1.63% in the case of the South African rand. But other emerging market currencies remain under pressure, notably the Brazilian real, down by 2.8% against the US dollar over the last week. Dollar index for its part trading back below 95 at 94.90, down by 0.26% over the last trading period. Well, it's be interesting to see if the dollar can regain that 95 level that we believe is key to the sort of global mood of the market, shall we call it. Okay, what's on the calendar? Events that may move the markets today. Well, a pretty quiet start to the day. It's a bank holiday in Asia, and we're a bit light really as far as high impact data is concerned. At 8 AM GMT today we'll have trade balance and global trade balance data out of Italy for the month of July. We'll also hear from Turkey about their budget balance for the month of August. And then at 9 AM GMT we'll have CPI measures across the Eurozone. It's inflation, of course, across the Eurozone for the month of August. And that'll be followed by the release of the German Bundesbank monthly report, a look from the German central bank's perspective at the performance of the German economy. And then at 12:30 today, the influential Empire State Manufacturing Index for September is released at 12:30 GMT, as I say. We'll also see foreign portfolio investment in Canada data for the month of July, alongside domestic data for the same metrics. And then at 15:30 we're back across the border into the US for 3 and 6 month bill auctions in the States. So a pretty quiet calendar, and we can ease ourselves into the week quite gently, I think. Okay then, breaking news and comment that's caught my eye overnight and over the weekend. First of all then, Donald Trump is considering the introduction of a 10% tariff on $200 billion worth of Chinese imports as early as today, according to Quartz. Previously, Trump had talked about a 25% tariff. So whilst if he does decide to do this today, the imposition of the tariffs would come earlier, it would be at a lower rate. So maybe that's progress of a sort. Meanwhile, Typhoon Mangkhut has lashed Southeast Asia, with Hong Kong and the Philippines bearing the brunt of the storm, in which at least 60 people are known to have died. And staying in Asia Pacific, New Zealand's service sector slowed during August, with its PMI slipping to a read of just 53.2 from 54.8 in July. Not down but not out, I suppose, is the way you could characterise that. Okay, food for thought then, something to take away with you into the trading day and beyond, and why not think about this? We're 3/4 of the way through the year now, and I thought it might be instructive to have a look at just what the performance trends have been among selected asset classes year to date. At the top of the table we can see markets such as wheat, the US 100 index performing very nicely. The US 100 index up 17.93% for instance over the year to date. But look, Brent crude oil and WTI crude as well, both strong performers, up a minimum of 14.6%. And US smaller companies, the US 2000 index, also up by around 12.25% year to date. If we look at the laggards, the underperformers, the Australian and New Zealand dollars both underperforming, but also the precious metals, gold, palladium and silver in the bottom half of this table. Laggards, they're not quite so bad, sterling and the Canadian dollar. The dollar itself, not exactly excelling though, up by just 2.9% year to date compared to some of the other important US metrics. Okay, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative and do take a moment to read this risk warning thoroughly. Thank you very much for your time.